Over the past few months, I've received a bunch of comments asking me how much investment bankers make, and so I decided to just make a video about it. What's up, everyone? My name is Money Boss. I'm a former JP Morgan investment banking analyst, and welcome to Money Boss, the best channel for tech investing. Today I'll be going over the different levels in banking, how much you can make core level, and I'll also calculate for you how much you'd be making per hour. But before I get started with this video, if you want a chance to win 10% of my April earnings from YouTube and Rare Liquid, then check out my video of update 2. Of trying to go from $0 to $1 million in 12 months. Or you can also just fill out the Google survey in the description below. Okay, now before going into compensation position by position, let me first start off by providing you with some context. First off, I'll be showing you two salaries per level: bulge bracket banks and elite boutiques. Bulge bracket banks are the largest international ones like Goldman Sachs, Morgan Stanley, and JP Morgan, and you would think that they pay the most, but they don't. Although these banks are the most well known, they don't actually pay the most. Because they know that candidates are willing to take a pay cut for the brand name. Later on in the video, when I get more into the compensation data, I'll be basing the numbers off of my personal experience at JP Morgan. So I feel pretty confident about the numbers for the bulge bracket banks. Elite boutique banks like Centerview, Catalyst, and Evercore are less well known but tend to only work on a select number of really big deals. And because the firms are smaller, the fees they earn are spread out amongst less people, and so everyone get paid a lot more. Elite boutique investment banking compensation. There is incredibly widely because there's no standardization amongst them like there are for both record banks, and boutique banks are pretty much just private firms. So they're willing and able to just provide whatever compensation they feel is fair, depending on how well that firm does during that year, to all of its different principals, partners, managing directors, associates, and analysts. My elite boutique investment banking compensation numbers are coming from friends who I personally talked to. So there's going to be a really wide range, as you'll see. But that's pretty normal in this industry. The second thing I want to mention are how bankers get paid. And there are two important factors for this. First is not always in a banker's control, and that is how the overall firm and group performs. And obviously, if the group does well, everyone gets paid more, especially senior bankers. The second is how you as an individual perform, and at the end of each year you're reviewed by your seniors and juniors. If you're an associate or above, these two factors determine how big your bonus is going to be as a banker. And obviously bankers care a lot about this. Because they're working crazy hours in order to earn big bonuses. Alright, with that said, let's take a look at investment banking analysts. Compensation analysts are usually in charge of 4 things, and those are financial modeling, building presentations, research, and attending meetings, which are usually conference calls with clients and other parties. I'm not really talking about the meetings where you're literally meeting the client or the board of directors or things like that. Any one of these 4 things can really take up the entire portion of the day. For example, I remember when I was at APM one time I worked literally 28 straight hours on a financial model and I didn't work on anything else. And I'll always remember this because I got in at 9 a.m. and then left the following day at 1 p.m. At the same time, I've also had days usually when I was working on equity transactions and were trying to launch a follow-on offering where we would have just non-stop meetings. And sometimes I even was double booked on my call. So sometimes on my work phone on one hand and then had like my cell phone just on speakerphone just to make sure that I was on both, but it was incredibly inefficient. I don't feel like I even was able to pay attention to either correctly, and things like that are a little bit more rare on the busier side, but just kind of goes to show that meetings can even take up an entire day as well. Anyway, if you want to learn more about the day of an investment banking analyst, or if you want to learn why I quit investment banking, feel free to check those videos out. Going into the salaries, it's very standard for analysts at bulge bracket banks to earn $85K in their first year, then $90K, and then $95K. Overall, across all 3 years, the range is usually anywhere from $115,000 to $195,000. At elite boutique banks, compensation is significantly higher and ranges from $150,000 to $240,000 in your first 2 years. Let's now take a look at how much these bankers are making per hour. Assuming that they work 80 to 90 hours per week and 50 weeks a year, bulge bracket analysts make $26 to $49 an hour, and about half of that post-tax for elite boutique analysts. That range is $33 to $56.17 to $28 post-tax. So basically the takeaway is that if you're an analyst, and even if you're working at a top bulge bracket bank or elite boutique bank, you're not actually making money incredibly efficiently. The dollars per hour, as you see, especially post-tax, are not really that high. But of course, as you get promoted more and more, the compensation increases exponentially while your number of hours decrease. So you'll see throughout the video that your dollars per hour really increases and improve dramatically as time goes on. Also, in case you're wondering why an investment banking analyst would ever leave banking, feel free to check out my review of the leaked Goldman Sachs Working Condition Survey. Alright, next up, let's talk about associates. Associates do a lot of the same things as analysts, but a lot less of the grunt work and actually spend a lot of their time checking analysts' work. And this doesn't sound like a ton of work, but it really is. Just to give you an example, as an analyst I might build a financial model with hundreds of rows and more than 10 different tabs on Excel. And what an associate would need to do is make sure that every single cell in that entire model is correct. So that might mean manually checking all the different rows and columns and all the data in there to make sure that everything is 100% correct. Or if I just worked on a 50-page presentation draft and I sent it over to my associate, then he or she would have to check every single word to make sure that there are no spelling errors, even sometimes if the font sizes are too small or too big. Those kinds of the really small changes and every single little detail would need to be caught by an associate. Of course, a really good analyst will do his or her best job to make sure that there are no mistakes. But basically associates are the ones that have a little bit more responsibility and pressure on their shoulders because they're expected to be that first check after the analysts and before the work is sent over to more senior bankers to make sure that everything is correct. Going into the salaries, bulge bracket banks usually pay $150K base to $200, with bonuses varying pretty widely depending on performance, making all-in compensation range from $225,000 to $400,000. At elite boutique banks, this range is even wider, from $300,000 to $850,000. And the top end of this range is a number I got directly from a friend, so I think it's pretty legit. So at this point you might be wondering, okay, you might get a better brand name with a bulge bracket bank, but why wouldn't every single person just instead try to work at an elite boutique bank besides the brand name argument? Usually the reason that most work at bulge bracket banks is just because there are way more spots, and if I had to put a ratio on it, I would say that there are probably around 5 to 10 spots at a bulge bracket bank for everyone at an elite boutique bank. But anyway, back to the data. Assuming that associates work slightly less than analysts and 50 weeks per year at bulge bracket banks, they'll be earning $56 to $123 per hour, while associates at elite boutique banks will be earning $75 to $262 per hour. So depending on your bonus and where you're working, your dollars per hour is gonna vary extremely widely. And this is also the point at the associate level where compensation starts to rise pretty dramatically and it gets harder and harder to leave banking. Next on the list is the vice president level position. The main difference between VPs and associates are that VPs hardly ever touch financial models and usually are just looking at the drafts of presentations to give guidance and comments to their team, associates, and analysts. DR deals more from a workload perspective. But there's a lot more responsibility on vice presidents to make sure that the entire deal runs smoothly. In addition to this, vice presidents are also attending a lot more meetings with clients in order to start building relationships because it basically prepares them to eventually become directors at the firm. Now, before going into the salaries, I just want to mention that these are a little bit more estimate versus the analyst and associate compensation. And this is just because the compensation is so much more dependent now on your bonus. and how you perform. And there isn't going to be a lot of really great, reliable data for this, because just imagine if you're a vice president or director, you're not going to be really feeding your information to places like Glassdoor or other companies that collect type of information. But anyway, everything should be in the right ballpark, so let's dive into the numbers. First off, bulge bracket bank VPs have base salaries around $250,000 to $300,000 in total compensation, ranging from $425,000 to $675,000. At elite boutique banks, the range goes from $500,000 to $1.3 million, and I've based this off of a friend who told me that first-year VPs at his firm can make up to $1 million. With that said, I would mention that making $1 million, especially as a first-year VP but really at a VP at any firm, is incredibly rare, and so you'd probably have to be working at one of the best firms and be pretty much the top performer on a per-hour basis. The hours continue to decrease to range from 55 to 65 hours, and assuming again that the VPs work 50 weeks a year, they are earning from $131 to $245 per hour at bulge bracket banks and $154 to $473 per hour at elite boutiques. As you probably have noticed at this point, the hours continue to decrease while the compensation goes up, and so this is why at this level it's really hard to leave banking, especially for a non-finance job where you would have to take a pretty big pay cut. Last up on the list are directors. The director level position is usually broken into different upsets, and for example, at JP Morgan we would have the executive director, who would then become a managing director, and managing directors who have been there for usually decades or so would eventually become heads of groups or vice chairman. And in terms of responsibilities, directors pretty much have a sales type role, in my opinion. And that's because the main responsibility that directors have is maintaining relationships with clients or initiating new relationship with new clients. This pretty much is the most important Bob for directors, because clients are the ones who give the firm's business and deals and transactions to work on. And so if directors are not bringing in deals for their group, then there's pretty much nothing for anyone to work on. The best clients also have the best banks, always pitching to them new ideas. And even though a CEO or CFO have a really good relationship with a managing director at a certain bank, other banks are always trying to establish new relationships and become our favorite bank forward that executive management team in order to work on future deals with that client. And so as a result, if you want to become a really good director, it's not really about financial modeling or really sometimes even that your understanding of the whole industry, although that is important. It's really about how you are with people. And at JPM, all the directors that I remember speaking with, they all of them told really good stories and were just really smooth talkers. But anyway, let's go into some estimations of director salaries, which continue to increase over time beyond the 3 years I have here. At bulge bracket banks we have a base salary going from $350K to $400K, leading to a compensation range of $675K to $1 million/3 years. At elite boutique banks the range goes from $900K to $1.9 million, and again this would be pretty rare, but possible if you're a top performer at one of the best elite boutique banks. Then looking at a per hour basis, directors work relatively reasonable hours, and I'm judging this off of my directors who would almost always lead by around 5 p.m. At bulge bracket banks, they would be making around $245 to $444 per hour, while at elite boutiques, they would be making $327 to $844 per hour. The best managing director is usually hold key relationships with the most important clients, and that's why banks do whatever they can to make sure that their directors are happy. Because if a really important director leaves to another firm, they can usually take a lot of those relationships and clients with them. And so that's why directors get paid the most, and it might seem or sound a little bit unfair that directors are getting paid millions while analysts, who are working literally 2 times as much in terms of hours, get paid probably like, I don't know, less than 10% of what the best directors get paid. And it's simply just because analysts are frankly a little bit more and are actually a lot more replaceable than these directors who have all these important relationships with CFOs and CEOs and etc. In case it's helpful, Here is a snapshot of the entire progression, and I think it's pretty interesting to see how the per hour changes over a pretty relatively short period of time, because this is pretty much 12 years. As usual, if a video on any other topic would be helpful, whether it's about investment banking or investing, please leave those in the comments below and I'll try to make a video about it. With that said, as always, thank you so much for tuning in. Hope to catch you in the next one. Thanks and peace out.